All right, I do want to look at the statement of cash flows briefly, just so that you have an overview. You will discuss a little bit more as far as statement of cash flows goes in future accounting classes if you do decide to take anything else like an intermediate accounting class. Why do we have the statement of cash flows? Why is it useful to us? And what is it? Well, the statement of cash flows reports the cash receipts, cash payments, and net change in cash resulting from operations, investing, and financing activities during a period. This statement can help investors and creditors and others access the entity's ability to generate future cash flows. The entity's ability to actually pay dividends, that's important for investors, and meet those liability obligations is important for the creditors. It gives the reasons for differences between what your net income is and what cash was actually provided by operations. Realize we could have a really, really, really big net income, but if it's all out there in accounts receivable and we haven't been paid and nobody's paying us, then we don't really have any cash provided by operations. And then we can look at the cash invested in finance during the period. There are the different classifications as far as the statement of cash flow goes. We have our operating activities, our investing activities, and our financing activities. These right here are the actual number portions as far as the cash flow statement goes. But we also have the significant non-cash activities on our listed as far as the statement of cash flows goes. Now, those things that would be included in operating activities are those income statement items. Is cash inflows from the sale of goods and services, from interest received, from dividends received. So all that stuff that we're receiving is going to come up there as an operating. Cash outflows would be if we pay our suppliers for inventory, pay our employees for wages, government for taxes, lenders on interest, and then other expenses that we incur. So this is the things that it requires for us to operate our business would be found underneath these operating activities. The next section is investing activities. When we look at investing activities, we are looking at those different assets, the investment assets, the long-term assets, fixed assets. Those are investing activities. So our inflows here would include if we sell property, plant, and equipment, if we sell investments, if we collect principal on loans that we have to other entities, because that again is an investment. That note receivable would be an investment. If we receive payments for that, those would be cash inflows on the investing activity side. Our cash outflows would be where we purchase these plant, property, and equipment items. If we purchase investments in, it could be in debt or securities equity for other companies that we purchase, or if we make a loan to another entity, those would be investing activities. For our financing activities, these deal with how we finance our company. Do we take out long-term liability debt? Do we look at equity financing? How are we financing? So, if we sell common stock, if we issue bonds, notes payable, things like that to invest for people investing in our company, these would be financing activities. This is how we get our money to operate our company. That's not operations, all right? So financing would be loans and equity. Outflows here, when we pay dividends to our stockholders, that is going to be a financing outflow. If we redeem long-term debt or reacquire capital stock, so if we pay off those bonds payable, that's a financing activity. If we reacquire capital stock, we purchase those treasury stock back, That is a financing activity. So what you're going to have to be able to do as far as your test and all is concerned is you're going to have to be able to tell me, I'm going to give you a situation and you have to tell me where it fits on the statement of cash flows. Does it fit in operating activities, investing activities, or is it a financing activity item? Now, for significant non-cash activities, this would be the direct issuance of common stock to purchase assets. So if we issue stock to purchase assets, then there's no cash involved. But we need to let the users of our financial statements know this. The conversion of bonds to common stock, direct issuance of debt to purchase assets, or the exchange of plant assets. These are things that can happen that are non-cash activities. And we need to have a note at the end of our statement of cash flows to tell what these significant non-cash activities are. Now, in preparing the statement of cash flows, we can use one of two different methods to prepare the operating section. Now, the indirect and the direct method are only applied to the operating section of the statement of cash flows. With the indirect method, we start with net income. This is actually probably the easiest of the two methods to perform because we start with what our net income was. We then add back any non-cash items. Non-cash items will include things like depreciation and amortization. Those are expenses, but they do not involve cash being paid out for those expenses. We would then deduct any gains, add back any losses that we have out there, and then analyze any changes to our non-cash current assets and our non-cash current liability items. This is how you would look at that indirect method. I'm not going to ask you to prepare one on the test, but and you are going to have homework problems where you go through these steps. The other one is the direct method. For the direct method, you actually have to look at, okay, what were my cash receipts from customers? What were my cash payments from operating expenses? What were my cash payments to suppliers? What were my cash payments for income taxes? You have to look at each individual thing and come up with what that cash that was involved, either cash coming in or cash outflows, as far as that direct method is concerned. So this one is a little bit more time consuming to actually look at because you are analyzing, things, a lot of things when you do the direct method. Both the direct and indirect method would be completed. You would either do the direct method or the indirect method first. Then after you finish that operating section, you would then do the investing and financing. Now, investing and financing are going to be the same no matter whether you use the direct method or the indirect method for using the operating section. So the investing and financing section should look the same under whichever method you decide to use for the operating section. And so that's just a little bit of an overview. Again, you will be asked questions and homework to go over some of these concepts for direct and indirect. But as far as the test goes, you just really have to know which section does it go on, and is it an increase or decrease. So you could say, it's an operating activity and it increased. It was a financing activity because when I paid dividends out, it was financing and it decreased. So those are some of the things that you're going to want to look at and know when you get ready to actually take the test or those particular items. Now remember, this test is not just on the statement of cash flows. But for the statement of cash flows, I'm only going to be asking you which section does it go on? Is it a cash inflow or is it a cash outflow?